All right, let's get back down to the markets and your money and the growing gap between the winners and the losers when it comes to stocks and its so-called stock dispersion, which your first guest this morning says does create opportunity if you know where to look. And she does. Erin Gibbs, the Chief Investment Officer at Main Street Capital Management, and joins us now. Erin, go a little deeper, as much as we can at 5:10 in the morning, on what stock dispersion is.
Sure. So dispersion is that the stocks are basically performing very differently. And so there's a big difference between winners and losers. And year to date, we've been averaging with 30%, which may not sound like a lot, but it's actually a record that we haven't seen since 2009, 2008. And when this sort of over 30% dispersion happens, we get a big difference between winners and losers, but it also tends to last for several years. We get these clusters of years. So this is something that we should be thinking about long term. And when you look at it just between sectors, the difference between winners and losers, and this is an easy example, is the energy sector, which is the best performing sector, is up about 50%, and the worst performing sector, consumer discretionary, is down about 25%. So you get this 75% difference in just, a little over 4.5 months. That's a big difference and not something that we're used to seeing. And so when you try to figure out which stocks to buy or which stocks to avoid, one of the ways is looking at sectors, or one of the ways to start looking is within sectors and within industries to see if there's just an easy sector industry that you can invest in across the board, or if you really have to do a full deep dive into stocks. And in this case, the answer is both.
Well, Erin, the only thing that has been working this year, and of course it didn't work forever before that, is energy. Energy's had a great 4 or 5 month run, but other than that, it was a pretty dismal place to be invested for the better part of a decade. Are you a buyer of energy stocks? And I primarily mean oil and gas right now.
Yes. So, and this is one of the areas where I will use an ETF. I own the IYE, the iShares energy ETF, because it is, even when you drill down into the stocks, over half of them have very positive ratings, quality. And so even though it seems, they're already so much, I'd still say you can be a buyer even at this level, just because of the positive outlook for the oil and gas industry, the energy stocks in specifically.
Do you think overall the recent couple-day thing we've had, Erin, may just be a counter-trend rally in an otherwise still down market? Has anything fundamentally changed for you macro-wise?
No, I think we still got a lot of headlines, and when you look at valuations, certainly some stocks have become relatively cheap, but they could become cheaper. We really haven't seen any sort of support when it comes to on the value side, particularly on your growth stocks. They just keep compressing. And so I think we could see that compression trend keep going. I'm not sure if the decline in the overall market is going to be quite at the pace that we've been seeing for the beginning of April and May. It may slow down, or certainly we're hoping, but certainly I don't see a stop in that trend just yet.
Erin Gibbs, Main Street. We appreciate it, Erin. As always, thanks for joining us here on Worldwide Exchange. We'll talk to you soon, Erin. Take care.